You would have always seen Chris Wood talking to us in the studios. This time around when he was in Delhi, I thought it's a better way to catch him in between meetings. Let me thank Chris Wood. Chris, many thanks for taking your time out, speaking to us at ET now. You are in India. I hope you've had a pleasant time here this time. Thick of election season, you have been meeting a lot of investors, a lot of government officials, a lot of stakeholders. What's your own takeaway?
Well, yeah, actually, given that we're right in the middle of the election season, it's interesting. Actually, we haven't been discussing that much the election. So the investors here in India believe they can't do anything about the election, and long term they believe India is still going to grow at 7% GDP or thereabouts. So the view is from the professional investment community that while the election will be very short-term important in terms of market dynamics, on a 5-10 year view, India is going to still be growing around the 7% range. In terms of people in the government I've met, actually what's been very good is precisely because the election's going on, the people inside the government machinery have time to talk because their political masters are all occupied elsewhere. So not one meeting has been cancelled or delayed. The only delay I've had is a 7-hour delay on Air India trying to go from Mumbai to Delhi.
You know, Chris, since you are saying that long term, and you've been overweight on India for a very long time, but this time around a lot of people are saying how we could see a reduced majority of the NDA, of the Bharatiya Janata Party. How should one be looking at it from investors' point of view? Do you think a reduced majority could also reduce the appetite for big ticket reforms?
Well, yeah, the smaller the majority, just the harder it will be politically to implement big ticket reform. So obviously the people seem to be assuming the incumbent government is going to be elected, we never know for sure. But if the incumbent governments are re-elected, the key issue for the market is the market will want to see a big enough majority to allow the Prime Minister to continue to run the Indian government in the way he's run it in the last 5 years, and that's in a highly centralized form of management. So many critics of the current government will not like that, but if you ask me what the stock market would like, the stock market's ideal outcome would be as big a majority as possible for the current government.
Do you think it is possible in the current scenario? You've been speaking to a lot of people here. What's the sense that you're getting on that?
But nobody has any hard idea, but people believe that the incumbent government has run an effective campaign. But what's interesting is the campaign has not been focused on economic issues.
It's changed. It's moved from economic issues to nationalism.
Yes. So, but obviously I have to, when I've got a high regard for the political election machine of the current BJP leadership, they are clearly extremely effective at fighting election campaigns. And so actually it makes sense not to base the election campaign purely on the economy. That clearly was the era back, I believe, was it 2004?
14.
No, 2004.
Yeah.
When I remember very clearly that everybody expected that then BJP government would win, and clearly it was the result was dramatically the opposite, and the stock market collapsed for about 5 days.
I remember in 2014, Chris, you were the first ones to say that Sensex will hit the 40,000 mark. We are inching closer to that level. Where from here in the next 3 years?
And I'm going to wait for the election outcome. My key point is the Sensex is about to reach my long-term target. But obviously we have to remember the Sensex is not in dollar denominated.
Right.
So I have to say I'm more constructive on long-term. My bullishness on Indian equities is greater than my bullishness on the Indian rupee.
Yeah?
Well, I have a neutral view on the Indian rupee. I
saw in your note this morning you did say how among the emerging market currencies, rupee is not a hot favorite for you.
No, it never has been. So obviously we have to remember obviously many of your audience are just domestic audience, so that's fine. But for foreign investors, their return is also determined by what happens to the currency.
You know, the RBI now has been intervening quite a lot. They want to maintain liquidity into the system. They have gone ahead with dollar swaps of close to $10 billion. How are you looking at it? Do you think this is going to ensure the rupee is more stable? You know, the kind of measures the RBI is now taking with respect to the rupee?
Well, I'm not in favor with all the details of the dollar swap, but it strikes me as quite an imaginative idea, and it should help, I think I'm correct in saying, in managing corporates' hedging costs. So I think it's a good innovation. Meanwhile, from a more big picture macro standpoint, not so long ago there was a lot of criticism of the government, you know, around the change of the RBI, saying the government was interfering with central bank independence, both on the monetary policy, because they were criticizing the monetary policy being too tight, and upon this whole issue of deploying capital from the RBI for other uses.
That issue is still pending.
Right, so you've had a lot of criticism. I was always sympathetic to the current government's standpoint that monetary policy was too tight here in India. I would say since the leadership of the RBI has changed and we've had more monetary easing,
Right.
I would say the basic comparative stability of the Indian currency and the Indian government bond market since the monetary easing commenced actually vindicates the criticism of the government, because if the RBI was being irresponsibly slack or lax, then it should see downward pressure in the currency and the bond market.
That's a huge vote of confidence that has come in from you for the government on the big RBI tussle. That was something that people were talking about.
On the capital issue.
That issue is still pending. I mean,
yeah, but that to me again is a storm in a teacup. The RBI is as overcapitalized as the Fed is undercapitalized. So it's not like somehow.
So you think there is a case of transferring money to the government?
Yeah,
while it could be inflationary though?
Within a moderate, yes, because the RBI is massively overcapitalized. The Fed is completely undercapitalized. So compared to the insane things happening in the G7 world, where I'll give you an example, the Bank of Japan has 50% of the Japanese government bonds on its own balance sheet. We have had massive quantitative easing in the Eurozone, where they can't shrink, the ECB can't shrink their balance sheet, where you have these crazy negative rates. What is going on here is completely highly orthodox.
Right.
So yes, I don't see an issue there.
Okay, let me shift focus. In the note this morning, you have compared Narendra Modi to Margaret Thatcher.
No,
Why would you say that?
No, I was comparing.
You said historically, comparison can be weighed with Margaret Thatcher.
Yeah, because there's one very clear. Fundamentally, Margaret Thatcher had an agenda to basically change the UK, which actually she succeeded in doing. But she was able to do that partly because she had 3 terms in government.
Right.
But towards the end of her first term in government, it was far from clear that Margaret Thatcher was going to be re-elected, because she was implementing some painful structural reforms, and that I think is where there is a bit of an analogy with the situation here.
But you know, Chris, would you turn pessimistic if Modi does not come to power for the second term? Because you said for hard reforms you need a minimum 10 years of government.
No, I agree. No, if he doesn't, if he loses power, the stock market is going down without a doubt.
Oh yeah?
Yeah, but then obviously if it goes down too much, one buys it, because India's still going to grow 7%. Yeah, but
what's your own estimate if that happens?
Well,
how much correction are we likely to see?
I think the worst case is what we saw in. I think I think the precedent is what we saw in 2004. It was 4, right?
Yeah, 2004.
I think that's the precedent. Yeah, and there's more downside than there was at the start of the year, because at the start of the year, foreigners hadn't increased their net holdings in Indian equities for 3 years. So foreigners were much less overweight than they've been for a long time. All the net buying in India in the last few years has been by domestic mutual funds, but since those. But beginning of the year, people were very concerned about the outcome of the general election. Since then, we've had these polls into making it more likely that it's a BJP victory with a reduced majority. And since those polls came out, you've seen foreign investors increase their holdings in Indian equities.
Right. You know, you've given me a headline there where you're saying in case Modi doesn't come, then,
Yep.
you know, we will see a massive fall in the stock markets. I don't know whether that's going to happen or not. We've just seen 3 phases of polls, 4 more are left. Let me shift focus then to another big risk that you've spoken about, that is the oil risk. Where are we headed with respect to oil prices? We're close to $75 a barrel mark. Where from here?
Well, actually, oil is, in my view, in a world where Mr. Modi is re-elected with a decent majority and can still basically run India out of the PM office, which is what he's been doing, and in my view is the most efficient way of running India. Actually, the single biggest risk for the Indian equity story is oil. So I always tell investors, global investors who have weightings in India, that it makes sense to consider having some oil stocks as a hedge. I'm personally constructive on oil. I was bullish on oil also last year. Oil was going up all last year. Then we had this dramatic decline in the fourth quarter, which in my view was a classic bull market correction. Bull market corrections are short, sharp and violent. The ex post facto rationalization of talking heads to explain this oil collapse fourth quarter was increasing production in US shale. The real reason for this violent correction in oil was a combination of extreme investor positioning and Donald Trump's U-turn.
Right.
Because investors were long oil because they believed the Americans were 100% serious about imposing these sanctions on people who sell oil to Iran. Then, as we all know, Donald Trump did this big U-turn. That oil then collapsed. Then Donald Trump successfully put pressure on Saudi Arabia to increase production. So right now this has become topical again because the Americans are making noises that they're going to not renew the waivers, I believe on May 2nd,
Yes.
which is next week.
Yeah.
Personally, although this is not what they're saying in public, I have a hard time believing the American president's really going to implement
You're
this.
saying he may back off?
Well, nothing's changed since 6 months ago. So if he doesn't back off and he implements them, then oil, in my view, is going much higher.
Why would you say he's going to back off?
Well, for the same reason he backed off last time.
You think he needs to be closer to China, at least appear to win Beijing?
No, I just don't think he wants high oil prices for his support base. I don't believe, I also believe Saudi Arabia is less likely to increase production under US pressure than before. Also, the American president is trying to agree a trade deal with China. They're very, they're much nearer getting that deal done after many months. So why provoke a huge argument with Beijing, which is what will happen? China's the biggest buyer of Iranian oil.
Right.
China just simply does not accept the American point of view on this. They don't believe that they're doing anything wrong. So I don't see the point of having a row on this. I don't believe that Mr. Trump is actually so obsessed about Iran himself personally. The pressure on this is coming from the national security lobby in Washington.
You've spoken extensively about the RNFS crisis, the kind of impact that this will have on NBFC, on the banking system, on the general economy of India. Do you think the government has been successful in ensuring that the contagion does not spread?
Well, reasonably, but clearly there's potential for this. I don't think we've read the last of the. I don't think we've seen the last of the ripples from this crisis, based on my. So, because the fact is a lot of institutions have had to slow growth dramatically, and I think the fundamental nature of the corporate bond market has changed because, so far as I understand it, bond investors now don't look at credit ratings, they look at the parentage of the NBFC.
Absolutely.
And so those NBFCs without sort of classic blue chip parentage, so far as I can understand, many of them are looking to get banking licenses. So what it means is the years of supercharged growth from the NBFCs are over.
From CLSA's perspective, if from a long term, which are the sectors that you're betting on? Which are the sectors that you would keep an arm's distance from?
No, the core sector in India I will continue to own is private sector banks, and obviously I think the quality of NBFCs now there's a distressed opportunity in the other NBFCs, and if you pick the right one, you'll outperform everything else. I think another obvious area remains those well-capitalized property companies with long-term track records who can take advantage of the dramatic consolidation triggered by RERA legislation. These to me are the two prime areas. Then I've always thought cement's a long-term hold in India. Obviously there's cyclical variables. In the consumer side, I think it remains very interesting. In the short term though, there's got to be a risk that we're seeing early signs that this NBFC blow up could impact consumption trends in the short term, simply because the loan growth slowed sharply.
Right.
But I would say first and foremost private space, and the other area clearly life insurance.
Life insurance.
Yeah. But if I had to choose between private sector banks or life insurance, I would say private sector banks.
All right,
Yeah.
that's going to be a big
Yes.
bet. All right, on that note, many thanks for taking your time out and speaking to us at TT Now.
Thank you.